Greetings from London, where I'm sitting, and where it's one of the hottest days of the year. So I apologize in advance if you can hear the hum from my little desk fan here. They tell us not to attribute any particular day's weather to climate change, but so I won't do that. But it kind of serves as this reminder that change is underway in the climate, and change is underway in policy, and change is underway in thinking, and all of those things go together, and that's what this discussion is going to be about. When I was invited to this conference, the organizers pointed out that they had decided to make it virtual no matter what the COVID situation would be, partly to play it safe, but partly because, it's a way of having these discussions without spending too much energy, which is still fossil energy, on that. And of course, this sort of format, although I would have loved to be in the same room physically as all of you, does make it easier to bring together thinking of people living in very different parts of the world. And so we're very lucky, I think, to have our two panelists today, who I will introduce in the briefest of terms, because otherwise we could spend the whole hour just talking about what they've done. But I'm joined by Diana Urge-Vorsatz, who is a professor of environmental science and policy at the Central European University, and co-chairs one of the working groups of the Intergovernmental Panel on Climate Change. And my other guest is Michael Spence, Professor and Dean Emeritus at the Graduate School of Business at Stanford, and of course a recipient of the Nobel Memorial Prize for Economic Sciences. So just wonderful guests, so wonderful that it's kind of, there's almost too much to talk about. The title of our discussion in the program is Climate Change, Climate Policies and Sustainable Growth, which is, a massive, broad topic. And what I thought we could start by doing, perhaps the best thing this sort of event, where we have two policy institutions and a research institution coming together, so thanks to the ECB and to the EBRD and the CEPR, is to really try to combine really creative thinking with really creative policy analysis and just scientific knowledge. And I think the best examples of doing that is when we really manage to be imaginative. So I have asked my guests to start by really using their imagination and cast their minds forwards to 2050. And let us assume that all these targets that are now being set will be reached. More or less, the world has now committed to net zero carbon emissions in 2050. Of course, I know not all the big emerging economies are yet on board or haven't made those commitments and may struggle. China, it's not quite 2050 and so on. But very roughly, that's kind of what the world says it's aiming at. So let's suppose we achieve that. Let's suppose we're successful. I want to try to think about, what does the world look like then? What does the economy look like then? How do social relations look in a zero carbon or net zero carbon world? A couple of months ago, I wrote a column in the FT looking back at the CFC and ozone layer crisis back in the 80s. And I just made the point that we seem to have solved that without getting rid of refrigerators and spray cans and these various culprits that made holes in the ozone layer. And I was asking the question then, does that mean that actually this much bigger challenge, admittedly, is also one that we can achieve without the world perhaps looking all that different in terms of how the economy works or how it appears to us as consumers, businesses, producers, and so on? But I don't know, and that's why I've asked the question to my two guests. How radically different will things look if all goes well, or how radically similar may it look? That will, of course, depend on how you think we get there and what changes we need to make to get there. But that's a challenge I've set. So I'm very excited to hear the sort of initial reflections you both have made around that question. So, let us see the little movie, as it were. If things go well and we achieve these targets, what does society and the economy and the world as a whole look like in 2050? I don't know who wants to start. Why don't we do you in the order you appear in the program on my screen? So Diana first, and then Michael. Diana, would you like to start?
invitation. It's a real honor, and because we are online, please apologize or please excuse me if there is some family distractions from behind, because it's school break now, starting now, so there might be. But anyway, but I do think it's a very good idea that we are doing online as a part of the solution. So, but first, just because in your question you hid a little bit of skepticism whether we will go there or not. But I think it's really, really amazing to see that by today, 76% of global emissions are covered or are almost covered, are covered with very significant commitment to carbon neutrality. And I think whether it's 2050 or 2060 doesn't matter, especially if it comes from not the developed world, so to say. So I think we could say that today it's not the political will which is preventing that. So let's assume that yes, indeed, we meet these very ambitious targets, which are indeed very ambitious. And thank you for bringing the ozone example, because we often use that actually also in teaching, and really that's very nice to contrast what can we learn from that story to climate change. But I think here the story is really quite different, and the world will look very different in 2050 if we do manage to meet these targets, and let's assume we will. Because in the case of the ozone, it was really one particular technology of a very fairly marginal end use or marginal appliance that we are using, or it wasn't the fundamentals of our life. In climate change, what is causing climate change is basically related to almost anything that we are doing, because almost anything we are doing, we are using energy for it. And almost everywhere in the world, the vast majority of our energy comes still from fossil fuels. So simply replacing that is not that easy, because my short answer is it won't be like the ozone issue. It won't be just like one technology instead of the other, and we can just lean back and throw our hands into the air and relax. No, it looks like, although there is also always very fascinating debates also among IPCC experts, for example. But I think we have a general agreement that it's not going to be possible to fix this problem only by technology. And even if what we call is only a technological fix, so let's say we switch all electricity to renewable electricity and all mobility to electric mobility, but still all of these require such fundamental societal changes and culture changes that at the end of the day, this will require from us also some sort of transformation of societies, business models, and whole economies, because there is no way around the fact that a very major pillar of today's economy, especially in some countries where the fossil fuel rich countries, the pillars of their economies will have to change. They will not be able to produce the majority of their income from what they do today. So that definitely, these are very significant changes. But we could talk about this all the sessions, so I want to keep my answer short. There is still choices in terms of how we get there, very big choices. What I want to posit is that if we choose the right, of course there are many rights and there isn't a right or wrong, but if we choose the package which focuses on efficiency, which focuses on a just transition, which focuses on energy demand, and which tackles together many societal goals together, then we can have by 2050 a world that's actually better off in terms of well-being, definitely, in terms of health, in terms of justice, in terms of many. The world will look in many ways better, and it will be only just a few percent. It will be consuming just a few percent less that it might be consuming without. So let me keep it there.
Thank you very much. It's almost a cake and eat it answer, but I hear you saying that a lot of the action has to be on the demand side, consuming less energy or trying to get more out of the same energy, and of course the link to the fair transition and the distributional issue
But I
is
did
clearly
say that
important here.
that there will be major losing industries, and that's not such a easy thing at all.
Before I hand over to Michael, can you name them, the losing industries?
Well, the fossil fuel industry. There is no way around it that we can only be carbon neutral by the middle of the century if our oil consumption and coal consumption and natural gas consumption goes to close to zero or to very, very little. So there is no way around it. That requires a very significant transition, especially it will be a major challenge for especially the countries who rely largely on these revenues. So yes, there is a cake and eat it, but we have to start now, and there is a lot of help needed for economies, for people, for companies, for employees, for countries who rely heavily on these branches of the economy.
Lots to dig more into there. Thanks very much. Michael, are you with us? I don't see you on my screen, but I'm sure you're there. The floor is yours, Michael. Let's see. Are you there? Yes, I see you, but I can't hear you yet. Still muted, I think. No, you don't come up as muted. Read my lips, as it were, but we can see you. Am I the only one with a problem? No. So the problem's at your end, Michael. You may want to. Now you've muted yourself. You may want to plug in or unplug a headset if you've been using that. Now, I don't know if there's maybe one of the organizers can send a chat message about where in the WebEx software you kind of choose your input source. But Michael, I will just continue for a minute with Diana, and then do talk and break in so that we hear that you're there. Is that all right? And I will trust one of the organizers to send you a message about how to fix your sound. But definitely just break in once the sound works. In the meantime, Diana, I want to push you a bit more because the fossil industries are sort of the obvious losers, and we're all kind of okay. That's how it has to be. But there must be more of them, right? I mean, one thing that obviously comes to mind is, will we be able to fly to places in 2050? But tell us a bit more about where the difficult trade-offs will be. What do we have to give up? We have to give up something, right?
Well, that's a very good question, and I don't think the experts would be able to agree. And I'm sure there are definitely different trains of thought and different camps on how people are thinking, or experts, or how scientists are thinking about that. There is definitely the camp who are urging us to consider the whole growth paradigm and whether we perhaps need to reconsider our addiction to constant growth, and whether perhaps we can consider slower levels of growth also in terms of consumption also acceptable, and rather focus on more better well-being and more community, more free time, more health, more education. So other aspects of the economy, or other aspects of well-being. But then there are others groups of scientists who certainly say that yes, it's still possible to fix by technology, and we just have to pour a lot more finances into innovation and startups and financing these transitions. But I think you did hit the nail on the head, and aviation is definitely one of the difficult areas, but it's not alone. There are several areas where we see that decarbonization in the timescales that we need to act is very challenging, because even if we do discover some alternative technologies, like electric aviation is coming, or potentially biofuels, but again, there are many issues with biofuels as well. We just won't be able to deploy these fast enough in a way that we don't destroy also our present economies or present industries. So certainly in these areas, I think we certainly need some reconsideration. It doesn't mean that we cannot fly, but certainly I think a serious reconsiderations are needed in these areas. Or agriculture, for example, also is an area where there are certain activities which are very difficult to fully have zero emission alternatives to non-CO2 emissions. It's very difficult to tackle. So there are areas where it's difficult to go to fully zero. And this is why it's so important to actually focus on those areas where we know how to go to get to zero.
I'm just checking that I haven't muted myself now. Thank you. I think we're just having Michael log in again to see if that solves the problem. But following up on that, I mean, there are two ways of passing the whole net zero. I mean, net can mean two things, right? It can mean that we try to get things down to zero within each sector. You even sometimes see businesses saying, we as an individual business are going to get to zero. And of course, the other way to get to net zero is to have negative emissions technologies. So that's a whole carbon storage and so on line of things. Where do you stand on that? Do we need to get as close to zero everywhere, or can we maintain some of these hard to reduce sectors because there are ways of getting negative numbers elsewhere?
Martin, this is a very, very good and very important question. And I think this is exactly the very topic where we have the most conversations, for example, also within the IPCC, or at least in the scientific literature and among the scientists themselves. The issue is that, as you rightly pointed out, that there are more and more challenges that we are starting to understand about negative emissions. For example, many scenarios which meet, for example, 1.5 degree climate targets, they assume very large negative they assume the deployment of very large amounts of negative emissions technology or carbon capture and storage, for example, through BECCS, so-called bioenergy combined carbon capture and storage. Some scenarios assume as large as 20 gigatons per year, but even the more conservative ones have at least 3 or a few gigatons per year. Now, just imagine just doing 3 gigatons per year of BECCS would mean that we would need as much land, as much more land just for BECCS as 3/4 of the land today which produces the word cereals today. We would need about 2/3 of, no, sorry, 3 times the amount of water which is presently being used by the globe's entire agricultural sector. So we are talking, and didn't even talk about the nutrition needs and about, and we would need 1.6 times the amount of energy capacity that is presently installed as coal power plants just to run some of these processes. So these have enormous resource needs. So these are, and there are many other questions about the deployment of the very large-scale deployment of negative emissions technologies. So certainly there could come some nice surprises to new technologies, but I think one of the keys is that we shouldn't rely on any single technology on a very large scale, because there are some wisdoms on anything. That from anything, if you take a little bit, that's medicine, and from anything, if you take, hi Michael.
We can hear you, Michael.
Yes, can you hear me now?
We can hear you now.
Oh, good, I'm back. Yeah.
Diana, with your permission, we pass on to Mike. You may have heard the end of that, Michael. We talked a bit about the difficult sectors, aviation and agriculture, and I asked, do we have to get to zero everywhere, or can we count on negative sectors outweighing the positive ones to get to overall net zero? And I think it's fair to say, Diana, that you gave some warnings about not relying too much on that.
All right. Well, Martin, do you want me to go back to your first question?
Absolutely. Let's do the big imaginative question. What does the world look like in 2050 if we get this right?
Okay. So with a certain amount of humility related to the normal quality of economists' forecasts, I think it's going to be, it's a hard exercise in imagination to conduct. But let's assume we actually get there. You know, what will this world look, what can we be pretty sure this world will look like? And we know it's a huge mountain to climb. The mindset now is some cross between determination, commitment, and fear that we won't be able to do it. You know, we're all, I think, certainly Diana and people who are experts in this are aware that the global economy is not going to stop growing. About 85% of us live in economies with considerable growth potential, and that growth has to be overcome by a combination of energy efficiency and reducing the carbon intensity of the energy mix. And so it's a higher mountain than I think many people in the developed countries truly understand. That said, you know, if we climb then we will live in a world in which I think, you know, our values will be completely different. We won't view this as a big challenge. We will have learned to live, you know, within planetary boundaries. I think if we had the opportunity to talk to ordinary people at that time, they would say, well, this is a multidimensional thing. It has to do with the way we do agriculture. It has to do with our values. It has to do with water. It has to do with biodiversity. It has to do with the way we produce energy. All of those things are going to have to be in balance. You know, if we're going to sort of feel, if we're going to live in a dramatically new normal, that we're going to get there. The other thing I would observe, Martin, is that if we do get there without a major sort of, you know, disruption or even calamity, then a very significant fraction of the world's population is going to live in what you might call high-income countries. And we're so used to thinking the world is configured the way it is. I mean, 25, 30 years ago, the vast majority of people lived in countries that had income levels below the emerging economy, the middle income countries. Now we have a very significant, probably majority, who live in countries with middle incomes, ranging from low to high middle income. And all I'm saying is if we don't have a disruption, this balance is going to shift again. Now that's in some sense good news, because as I mentioned at the start, you know, to the extent that it is this remaining growth that is required, you know, to deliver opportunity and so on to a very significant fraction of people in the world, that won't be the nature of the mountain anymore. We will have solved the problem, and we will all be relatively richer, and we will have better developed and better capacity for, you know, adaptation. We'll be an adaptive system that is much, much better than we are now. And finally, you know, I mean, this is just pure speculation, but we're if we're beyond net zero by 2050, we are going to live in economies built on digital platforms for sure. And indeed, that will have turned out to be part of the solution. I think I sent you some slides before on, you know, why I'm cautiously optimistic. I understand Diana's right, that, you know, you don't want to kind of, you know, overdo the technology side of this. There's a lot more to it in terms of policy, commitment, values, changing behavior, and so on. And I completely agree with that. But we are about to be armed with incredibly powerful tools that we didn't even have 10 years ago. So can I flick through this quickly, Martin?
Please do. Yeah, I think the slides are up now. So tell us about the detail.
Oh, so the tools that I have in mind are really three. One is, you know, the underpinning of the digital technology, which is semiconductors. And this is a picture of density. So we started out with, you know, in pretty low power machines, you know, back in 1970. We're down now to semiconductor density, transistor densities on a semiconductor in the sort of 5 nanometer range. And the reason I say that, I don't want to be sort of techie about this, but the reason this is important is they're incredibly fast and powerful, but they also consume much less energy. I mean, they're sort of silly projections, and I'm sure Diana has seen, that if we stay on the present course, the data centers of the world will consume all the current energy, which is absurd, and we're not going to get there. But this is really quite extraordinary. And the next graph, could we just flip to it? It's basically the same thing, but you can see what these densities are in terms of other things, like red blood cells and so on. The third one I wanted to mention, so we'll just flip ahead to the third one, is maybe I can do it. Greta, could you go to the third slide?
I think we have it now. The gene sequencing is up.
Oh, it's not up on my thing, but anyway, gene sequencing. This one is really quite extraordinary. Now, you might think this is sort of really has to do with sort of health, and it does. And like all powerful technologies, they have, enormous potential and create enormous challenges in terms of ethics and management and regulation and even the legal surround of it. All of these technologies have that property. And certainly gene sequencing and gene editing definitely have that property. But what you can see is the costs of sequencing the human genome, which is the core technology for gene editing, is been coming down sort of more or less like Moore's law until we were well into the sort of 21st century, and then it started dropping like a stone. And friends of mine say we're now at $500 to sequence the entire single human genome. And that just puts very powerful tools in people's hands. Now, I think the reason this is relevant to climate change is because of the agricultural side. Now, again, there's going to be people who are terrified of this, and I understand them. But, we probably are going to have, by the time we get to 2050, if we're successful, multiple revolutions in the way food supply and agriculture works. The last one, I think almost everybody's aware of, this is solar. So when I started working with developing countries that are knee deep in coal, many of them, and kind of were participating in the climate change discussion, with sort of tentatively, but saying, yeah, but we got to build a ton of electricity generating capacity. And the only thing, and the dirtiest but cheapest thing available to us is coal. And over, not much more than a 10-year period, both wind and solar have become highly competitive, assuming you have the infrastructure and so on to do it. And so bottom line is, and I guess I'll stop on this because I don't want to be too long-winded, is I think we now have incredibly powerful tools to make progress with this. And when you combine it with the sense of urgency, the sense of commitment from businesses, from governments, and so on, we got a long journey to take, but there's a huge demand for solutions. My friends in private equity are all sort of declaring this is the next growth area, for sure, because they think that technology solutions will be there in the hands of imaginative entrepreneurs, but more important, they won't have to struggle, convincing people to take them up.
Thanks a lot, Michael. I'd like to pick up on some of that, because you very rightly point out that we have the whole global development challenge already. Even if there weren't a climate crisis, there would still be the issue of getting people out of poverty. And it seems to me that any answer to the climate challenge that relies on people still keeping a couple of billion people in poverty just won't work. But I do want to push you a bit and ask, how do the numbers then actually add up? So we have a energy efficiency crisis, I suppose, to solve already, and we're going to have to increase GDP globally by much more. So it's a double problem. And I suppose your answer will have to do with some of these slides you showed. But is that basically it, that we think that we can get productivity to go so high that we can make everyone live like a high-income country middle-class person using so little energy that the numbers actually work? Is that, I'm putting it, quite sharply there, but that's how the numbers have to work out, right? Is that realistic?
Yeah, the alternative, look, there's four parameters, at the most basic level. We're going to have population growth. We're going to have rising GDP per capita. Okay, that gives you the global GDP. And then you have energy efficient, that Diana knows all this, energy efficiency and the carbon intensity of the energy mix is the two remaining parameters. So we're not, by and large, population growth is, has determinants, but is not a policy variable in most places. And GDP growth, no developing country is going to deliberately walk off the stage in the interest of providing some kind of global public good. So the answer to your question is yes. The last two parameters have to do the job, and so both those numbers have to come down much faster than they would if the challenge were just making the 15% of us who live in developing countries go carbon neutral. For sure.
That is very clear, and I want to ask Diana about that. You wanted to add one thing, Mike?
Let me just add. I mean, I think if the technologies work, I think one subject we should discuss a little bit down the road before we end is whether we can get these technologies and the financing of them and all the related infrastructure to a big enough set of countries that this actually comes about. Again, let me just put it on the agenda.
Absolutely. Let's make sure we get back to that. First, Diana, I'd like you to address this international development dimension because we didn't talk about it before. But I mean, do you agree, first of all, with the view that the only way we can do this is if it involves also poorer countries and poor population in middle-income countries to reach, I called it sort of Western middle class level of prosperity. I don't say lifestyles because maybe the lifestyles of that class has to change, but level of prosperity. Now you're muted, Diana. I hope you're just muted and it's not another bug.
No. I was muted. Thank you very much. Yeah. No, I absolutely agree with the vast majority of what both of you are saying. We certainly must tackle the two challenges together, the development challenge and the climate challenge together. There is, I'm not sure if we really can't do it without, but I don't think we should do it without. I really think we must try to do the two together. But it's not only by country, it's only within countries. It's really appalling that, for example, just in Hungary, but almost everywhere in the European Union, the richest 1% emits more than 10 times more per capita than the poorest half. So, for example, in Europe also, the poorest half emits only as much as what we need upon a per capita basis in 2030, by which time we have to significantly reduce emissions. But the richest 1% and even the richest 10% is responsible for orders of magnitude more. But what's really appalling is that while the poorest half have reduced their emissions in the last 2 decades by a third, the richest 1% actually increased emissions by 7%. So I think this is where this is really a problem, which is the same within countries and same international globally, that we are only talking about this, but at the same time what happens is that this gap is actually only widening, that the rich keeps emitting even more and more, and we are among those. So those who are speaking here and listening to this are definitely in that boat, while the rest is just getting, it's not, that development that Mike was talking about is not really taking place. So definitely we have to tackle these two together. And on the one hand, I would challenge Mike's hypothesis is in that on a finite planet with finite resources, whatever technology we have, we will not be able to have constant growth forever for millennia, because civilization is around for thousands of years. Hopefully we are going to have civilization for tens of thousands, maybe hundreds of thousands of years. There is no way we can have constant growth of consumption. At least growth in well-being, it's different, and that's what I'm trying to posit, that I think in the very richest countries maybe we should, but this is not the IPCC's voice at all, this is my own perspective, perhaps we should start to reconsider focusing less on just growth of consumption and more growth on other things, for example, more free time, more community, more more health, more so other good things that people want. But I absolutely agree that there is not even more to talk about that on the poorest half of the world. We definitely have to focus and tackle these two problems absolutely together.
I'm really glad you brought up that point, because it comes up so much in discussions I also have with peers and friends and so on, this idea of whether you can have potentially infinite growth in a finite system. And it's one where I find that very often economists and non-economists land on different but predictable sides. So I want to hand that right over to Michael and see what he makes of that analysis. It's a well-known claim.
So thank you. I completely agree with Diana, and my only point is we're not going to have, if we have unlimited growth, it's going to be in opportunity and welfare in the multidimensional sense. Nobody reasonably thinks that, if say you took the richest part of the world and made it doubly rich and asked them what are their priorities are, they're not going to answer more yachts and Mercedes and whatnot. They're just not, right? They're gonna want other things. And my point was the one that Diana reiterated, which is, but the challenge still remains that the people who haven't got where we are yet are desperately want to get there, right? Before they make this transition to a set of kind of growth patterns and underlying values that are rather different than they were, say, 50 years ago, when we were all sort of becoming better off in the material sense. Okay, material well-being is declining as a priority for understandable regions in the rich part of the world, and it will decline eventually in the emerging economies. But since it's part of the mountain we have to climb, to help them get there.
But Mike, there's a lot going on in the word material there. So I want to ask you a sort of slightly techie economist question. I mean, is what you've just said compatible with infinitely growing GDP? Just that GDP could mean things that don't really use physical resources much.
No, I mean, there's a lot of discussion in economics now about whether we should care about sort of declining GDP growth or declining productivity growth and all that sort of thing. But the answer is, if values shift, let me put it this way. Okay, I ask myself, the societies allocate resources in the end where their people, think they're going to gain, benefits. So I ask myself, at least in the United States, what is the biggest federal budget for research that's designed to move the ball down the field? And the answer is it's in the NIH. NIH funds, health and biomedical science. Are we funding that in order to get growth? No, we're funding it in order to improve the quality of life in other dimensions and deal with sort of health and, deploy science and so on. And you can say that, you can give those examples over and over again. It's just so the bottom line is, I mean, the simple answer to your question is, no, I don't think there's any reasonable chance that 50 years from now we'll be focused on material well-being and growth in consumption. And I just completely agree with Diana. But I'll tell you though, 10 years ago, I was talking about developing economies with a group here in Italy. And somebody came up to me and talked about the slow food movement, which is, a version of the sort of no growth. And he said, what do you think of that? And I said, I think it's, the start of a very important change in our society, but I meant the developed economies. I said, you probably don't want to go to rural India and talk about the slow food movement yet, okay? Right? Per capita income, let's call it $800. A year. I mean, I think it's important just to say that this is context specific. And in order to solve this problem, we have to sort of stand in the shoes and see the world through the eyes of people who are in very, very different circumstances, kind of across the globe.
So it's really interesting here because you have both emphasized in somewhat different words. Mike, how you put it in your initial remarks was that the values will be different in 2050 if things go well. And I understand better what you mean now. It's that material growth, GDP growth, incomes, consumption, all of that will recede into the background in terms of our priorities relative to other things, leisure, experiences, other sources of well-being, which Diana brought up. But all of that makes for a hell of a political economy problem today, doesn't it? And many of the things you've already said, both of you touch on this, both within countries. Diana, I was slightly shocked by this distributive figure you gave about how the poorest have reduced their emissions while the richest have increased theirs. You said that was within Europe. What was the geographical entity
that
there?
was only Europe. Yeah, that was for Europe.
That is, I did not know that. That's quite shocking. But given that, and of course, even more at the global level between rich countries and developing countries, the political economy challenges are obvious. Who does what? Who goes first? Who pays the price? How do you think about that?
No, absolutely, and I think this is where actually we may fail, because the issue is that we would have to see that it's ourselves who would have to pass policies against ourselves, and we just don't seem to be able to do that. Because I already mentioned this enormous increase in the gap in emissions in Europe, but it's similar in the world, even though I don't know if there was a decrease in emissions anywhere, probably not, but still the gap is enlarging. The vast majority of emissions growth in the past few decades was from the richest 10% and a little bit from the next 40%, and almost no growth in total emissions, despite all the population growth in the poorer half. Was very little total emission growth. So really, this is the problem, that we would have to go through all of these changes that we are talking about. And what I find very disillusioning or very worrying is the fact, our own schizophrenia, that on one hand we have these really amazing ambitious targets that we have already been talking about, but the same government, the same businesses, those who have set these targets, but the same businesses still keep pouring enormous amounts of investments into fossil industries and fossil related industries. For example, we brought up aviation, but the same with internal combustion engine related land transport and so on. And still we are still investing in new factories producing these, which even in the most developed countries. So I just picked up the latest figures. So just since the Paris Agreement, we have poured $3.8 trillion into fossil fuel related industries. And one would have thought that the corona crisis, the COVID crisis, actually gives us an enormous chance. And we all thought to do these really otherwise unpopular reforms, because what did the corona crisis with us? What it did is exactly those industries were losing out, and those had to already send away a lot of their employees, or at least their share prices were down and so on. For example, aviation, but also oil and coal and many oil transport related companies. So we thought that was such an amazing opportunity to do this, to accelerate the transition to a more digital economy and a renewable energy based economy. One would have thought that most of the stimulus packages would flow into accelerating this transition, which anyway already started, because the fact that we are now meeting online probably would not have happened without the COVID crisis, and we are saving enormous emissions through that. And instead of accelerating this and locking in a lot of these amazing new digital solutions, rather we are still putting on the ventilator some of the old 19th and 20th century industries and trying to resuscitate them and keeping them alive. And for example, if you look at the recovery packages, again, 1/10 of the sum that I just mentioned, so $332 billion from 31 developed economies and 8 MDBs are still flowing to fossils. So 42% of all public money, which goes to energy from the stimulus packages, and only 35% goes to clean energy. Why? Because the issue is, and this will be my last thought on this, but the problem is that if we had acted still, let's say, at the time of the Paris Agreement, we still could have made this transition without having to have a lot of stranded assets, without having to have a lot of businesses which will not be able to make profit. But by today, with all these investments, we have now committed emissions which are 150% more than our 1.5 degree target to 2030. In 2030, and 50% more than if we want to meet a 2 degree climate change target. So that means that today, if we do want to meet these targets, we simply have to say to some businesses that, sorry, you're just going to go bankrupt because you're not going to return your investment. And I just don't understand how, and I'm sorry, but you are the finance sector, and I still haven't, I give a lot of talks back, but I haven't got an answer yet. How come that some financiers don't consider it significant risk enough to still pour money into such industries so we are all banking on all these commitments not materializing? But even if we do, but isn't there at least some risk that one would not consider these as safe investments, since 3/4 of world GDP have these commitments? So anyway, sorry to be a bit provocative.
Am I unmuted? Yes, it went on and off a few times. Yeah, on the contrary, that's precisely what we want, and I think a lot of the people in the audience will probably think, well, we're sort of trying to do all of that to measure the risk and so on. But I hear you saying it's nowhere near enough. Michael, I'd like you to give your response to that, but also on the political economy point. I mean, you brought up the point about how we get developing countries to want to control and reduce emissions, and that has to do both with technology transfer, and it has to do with financing, and of course until now the rich world is not making good on the promises made, I think as far back as in Copenhagen of the 100 billion a year. So maybe you want to address both of those things.
Yeah, no, this first of all, Diana is absolutely right. The distributional aspects of this are multidimensional and really important, and they've held up the discussions because of misunderstandings and so on over a long period of time. And the second thing she said is absolutely right. The later you go, the more disruption you get, right? The more stranded assets, the more. I mean, I think of it as industries that are going to go out of business, but the issue is, what about the people, like coal miners, right? So the issue is, in addition to the disruption of companies, is, can we sort of help the people make transitions from one way of earning a living to another? Look, I mean, the one thing I disagree with Diana about is, I know these distributional issues are important, but if you look at carbon emissions, in the last 20 years, the big contributors are the big, fast-growing emerging economies. China, prominently, but India is well on the way, unless they trip and stumble and fall flat on their face, which I do not expect to happen. I mean, look, we're talking about, this is 2.5 or 6 or 7 billion people out of a total of 7.5 billion in economies that are sort of, on the move, growing at 6-7% a year, doubling every decade. Right, and so I think one thing. So let me respond to the last part of your question, Martin, and hopefully this will be helpful. One of the things I find encouraging is that the central banks and other financial institutions are engaged with this problem. They understand, that there are obstacles to financing this. So it's, it would be lovely, given the costs of solar, if the massive amount of incremental electricity generating capacity that India is going to need on their journey in the next 25 years was done with solar. And there's probably good reasons to think with smart enough grids that they could get this done. But India may be an example, and there's certainly lots of others, where there's going to be a financing issue. The government runs deficits, there's costs of capital issue. The cost of capital, let me switch location to Nigeria, a big oil producer. The cost of capital in Nigeria and a number of other African countries don't even look vaguely like the cost of capital, we face in the advanced countries. And so I think what's going on is that the ECB, other central banks, the major international financial institutions are now engaged with two things that are really important. And it's a good development. One is risk, getting risk assessment right in investment, so that some of the things that Diana talked about, sort of kind of investing on autopilot in the stuff that we invested in last year starts to get disrupted by realistic assessments, measurement systems for risk. And the second one is we need to intervene in this cost of capital, or it won't be feasible to build the green energy infrastructure in many of these countries that not only they need, but we need to solve this problem. So I think we're moving in the right direction. It would be lovely if it were faster, but I think that the pieces are starting to come together.
Thanks very much. This is so fascinating. I realize I've neglected to encourage the audience to send any questions they might have in through the chat. So anyone who's watching or listening, please do that, and I will try to pick some of them and pose to the guests. Just picking up on that last thing, then Michael, given that one of the co-hosts is a central bank, central banks are all pretty much now committed to helping with information, disclosure, at least assessment and maybe de-risking of their own balance sheets, and encouraging the same in corporate balance sheets where they have an influence. They could go further, right? They could actively try to go out and change the cost of capital for environmental technologies or carbon transition activities. Right? I've called this kind of creating a green spread. Actually go out there and change pricing in the market so that you get that difference. I mean, would you support them going that far?
Well, it's to some extent governments have to do that too. But yes, I think you can go overboard in that dimension, but you can tip the scales in favor of the technologies. But I think that the equally important issue is you have especially in early stage developing countries, you have very high risk premia built into the cost of capital. And I think we need the IMF I'll just state it bluntly, we need the IMF and the World Bank and the regional development banks with the collaboration of the central banks to essentially intervene and absorb some of that risk to reduce the effective cost of capital so that some combination of public and private sector can build the incremental energy infrastructure in these countries in a green fashion. Otherwise, I think, and by the way, it'll help them grow. But I think that's a crucial bottleneck that, needs attention along with a lot of those things.
Which is essentially about some form of resource transfer from richer countries to poorer countries in a way that subsidizes investment. Diana, I'm pretty sure you will agree with that, but do feel free to comment. But I also want to ask both of you about another area of policy, which is trade policy, where something that's coming up on the horizon is green tariffs, essentially carbon border adjustment, in order to avoid carbon leakage. In particular, a worry in Europe, where there is seemingly an ambition to go much bigger on the carbon transition, raising the cost of emissions and encouraging a transition to greener technologies, but a worry from industry about carbon leakage. So both of you, I'd like to hear your thoughts on carbon adjustment, trade policy, both in terms of whether it's the right policy for the sake of stopping carbon leakage, but also what does it do to the necessary collaboration between rich and poor countries? Does it just destroy the possibility of getting to some common understanding? Is it too aggressive? Diana, I've asked many questions, so pick the ones you want to answer, and then I'll go back to Mike.
Yes, thank you, Martin. And if you don't mind, actually, I go back to your previous question, because I did want to react to Michael was saying that I fully agree with that. But I would complement it with one more thought, which I think is a major challenge of the whole the financing of this whole transition that we need, that we just need, we need to change our thinking about what we finance. And I don't know, and I'm not a financing expert at all, so I would be very curious of both of your thoughts on this. But because we traditionally used to finance power plants, dams, a big infrastructure. But what we see now is that the best solutions are actually small scale solutions. PV is that, Michael already alluded to this, that the single cheapest energy technology today in the majority of the countries is now PV. But the best way to do that is actually not necessarily big PV farms. That's what we sometimes think about. But actually many countries, especially the countries that Michael talked about, which are a very sparse land, they don't have the land for big PV farms, and also often we displace a lot of other things on the land if we do that. However, we have enormous amounts of infrastructure, and if we integrate the PV into our infrastructure, that's a completely different story. We have plenty of space, even though on a specific scale, perhaps it's more important. But what this would actually mean, having to finance instead of dams or nuclear power plants, instead of that, we would have to finance zero energy buildings. Now, that's not something a big bank can easily think about, but that's really the fundamental pillars of the solution, because by now we have learned how to do and how to retrofit almost any building in any part of the world as either net zero or actually energy positive, so to become the power plants of the 21st century, so producing more energy than what they consume. But we cannot expect every citizen of the planet to take responsibility for these investments, because usually, although they are profitable investments, but they are big investments, and most people, most homeowners, most building owners, or most tenants or renters, they don't have the kind of financing to do this. So how to, first of all, one solution is what you already alluded to, some sort of transfer between the rich and poor, perhaps through a carbon price, perhaps through a border carbon price adjustment. There are many ways how we can do this, but I still see this is one of the most important barriers for really tackling this problem, because we need to go from financing the big scale to the small scale, and that's I think one of the biggest challenges. And then let me have listened to also Michael's thoughts, and perhaps I'll come back to the other topics then.
Thanks very much. I'll use my sort of chair's privilege, because you encouraged both of us to react, and just one thought that comes to mind is a really fascinating point about going from kind of big scale to small scale. But then, of course, the challenge is connectivity, you know, how to make all of this work together, which we would have anyway, because we need to optimize both energy use and energy production with technologies that are a bit more intermittent than the old fossil fuel technologies. So it seems to me that there's a challenge in how we think about industrial policy, energy policy, that involves tying things together, tying small things together in a way that wasn't really the big challenge for policy in industrial-led society. And it's quite interesting how we see everywhere in Biden's Washington, in the IMF's Washington, many other places, a sort of rethinking of an active role for the state in not sort of all-style social planning, but something about coordination, giving direction, creating salient points for the private sector to coordinate around to make those connectivities happen. I will stop abusing my privilege now and hand it back to Michael, both to respond, but also I would like to hear what you think about carbon border adjustment.
Yeah, you're both making excellent points. I mean, it's fundamental when you're making a major transition that has multiple moving parts, and one of them would be, you know, smart enough grids that you actually have an integrated, you know, green energy system with lots of small players on it. You need government, you know, coordination. You need something that, you know, causes expectations to converge on the direction you're going. I mean, in developing countries, this is why they have 5-year plans. They're not really plans. They're designed to get everybody to sort of realize we're going here together. And then that essentially, it channels investment and makes the risks seem somewhat less, that you go out there on your own. And we got these powerful tools, you know, I mean, the next generation of iPhones is going to have I keep going back to what I said before, 5 nanometer, chips in them, made by TSMC in Taiwan. It's going to have significant artificial intelligence capacity in your hand. I mean, it's unthinkable, even 10 years ago. And these things are going to get used in the energy system, for sure, right? I mean, think of the computing power, that if you aggregate them all up together, that you have in the phones we all carry around with us, let alone, the big data centers and stuff like that. So we can get there, but we need, direction. You keep wanting us to ask, I'm in favor of carbon border adjustments for sure, because I think without them, then you get a different version of the race to the bottom and all kinds of screwed up incentives. The trick is carbon border adjustments, absent a really well-built measurement system are kind of tough, to implement, and B, subject to manipulation. So I think Diana probably knows a lot more about this than I do, but I think part of the energy transition is really significant investment in the measurement systems that we operate on, so that we can actually implement things like carbon border or various versions of carbon pricing that have been tried out and proposed.
Diana, do you want to pick up on that? Because I mean, it is a possibility, as I'm not qualified to tell, but that we just don't have yet enough information to kind of implement all these sort of optimal policy designs, mechanism designs that economists can come up with. How are we? How well equipped are we in terms of just measurement and information?
I think that's absolutely right, and I'm not sure if we will ever be able to fully tackle that, because simply some of these relationships are so complex, and some of these some of the supply chains are so variable and so dependent on just times or periods or geographies and so on, that I think if we really want to be very precise about this, that has enormous cost implications. So I think it's a big question whether we can do it really precisely. But it's very difficult by today to design a totally optimal policy landscape, which is ideal from an economics perspective, because we cannot avoid that by now we have an enormous patchwork of different policies enacted at different times in the different sectors, in the different countries, in different levels, and different international commitments in climate change and not climate change, which are not necessarily related to. So what we are trying to do, we are trying to fix the holes. There are many holes in this patchwork of policies. Ultimately, for me, what would have been theoretically the most appealing, if every single person has a certain carbon budget and or carbon allocation, carbon allowance, and then that can be can be then traded, and every industry, everything has to buy it from the purple, because in the end that would be very fair, that everybody then has the same around the planet, and then that would also solve in a way the transfer issue that we have been talking about, and the rich versus poor issues and everything. But certainly this is infeasible by today, so that won't work. So simply, so then I agree that we will have to try these different policies which correct for some of the inequalities and some of the outsourcing. I would not worry about too much leakage. I think that's the industries are being placed in different places of the world anyway, and I think at the end of the day, energy prices are going to play less and less a role in this. So I think that's I would not consider that as a problem.
I love the ideal scenario of everyone having a proper individual carbon budget and being able to trade or buy quotas, emissions quotas. Short of that, what do you make of the proposals you see from economists on both sides of the Atlantic, actually, for sort of carbon price and dividend, carbon cap and dividend, charge a lot for emissions and then distribute it in a more or less equal share to everyone?
Well, certainly Michael will be a much better expert in that. On one hand, it sounds wonderful, and there is absolutely no doubt, and I don't think anybody in the climate science community would disagree that we need a high carbon price. There is just no doubt about that. How that actually happens and how those revenues are redistributed is a much more complex and much more challenging question. And the reason why I worry a little bit about, or my concern about, is fully market-based solution, cap and trade, and in general trading solutions, they're actually severalfold. But one is that these schemes often tend to, or actually they are forced to prioritize the low-hanging fruit. And harvesting only or picking only. So it's cherry picking. It results in cherry picking. And the problem is that by today, we actually have to pick all the fruit from every tree. And we cannot afford picking only the low-hanging fruit. So if this is too abstract, let's just take the example of the building sector. If we, for example, put the building sector under a cap and trade scheme, which Europe is now strongly considering, then what's going to happen, that perhaps there will be investment and they're in the buildings, and until 2030 we will be fine because they will do the most cost-effective investments on the buildings. Perhaps, change the light bulb or put here the most cost-effective insulation, but not changing the windows because that may be too expensive. But that will lock in, that will result in a tremendous lock-in, because now that we know that we can actually save 90% of emissions per building, and instead we are just saving 30%, that will have an enormous trouble later on by locking ourselves out of this remaining 60%, which would not necessarily be much more expensive. In fact, there's a lot of evidence that on a kilowatt hour saved level, the cost is roughly the same for a 30% saving or a 90% saving, but you do have to put a lot of money in individual buildings. These are major investments, and these are just not very favorable because usually they do have longer payback times. So these are not so favorable for cap and trade schemes and such market-based solutions. So that's why I'm a bit skeptical, but on the other hand, it's clearly extremely important to have a high carbon price and use that revenue to, first of all, for those transfers that we have been already mentioning many times, which is crucial, but also to invest, to redirect those to invest in areas where it's very difficult, small-scale investments are needed, also on behalf of the poor. For example, the buildings of virtually the poor half of the whole globe.
It is kind of astonishing to think about us locking into less than optimal or less than carbon optimal solutions now, given that that's like the other example you gave earlier. We're sort of creating more stranded assets for ourselves, which doesn't really seem rational. And there was a judgment from the German Supreme Court just a couple of weeks ago about how it may even be illegal under German law to be storing problems up for the future. Michael, I'd like you to respond to that. Why is it that we're locking ourselves in? And let me add, because this is one question that's come in. Isn't this a bit of a counterexample to your technological optimism? There's another one that's come in, which is somebody mentions fracking in the US, which means that cheap liquid gas has displaced coal or is displacing coal as a source of energy, but also reduces incentives to invest in renewables. So it's another example of how what seems like the most efficient short-term solutions actually lock us in for the longer term. Do you agree with that? Is that a worry?
Yes. Yeah, in multiple dimensions. At the risk of repeating myself, what I'm worried about is the biggest lock-in that we'll see is we'll construct the wrong incremental, capacity in where most of the growth is going to occur in the developing world. And then they'll have the same problem of retrofitting everything. Look, let me give a specific example, that's kind of extreme, but it's real. When I was focused 10 years ago on a commission that I had the privilege of chairing on developing country growth, one of the things we went looking for really bad ideas. And one of the worst was that almost everywhere, fossil fuel energy was being subsidized. And I thought to myself, what's going on here? Well, it's kind of the political economy leads you in that direction, because you can just tell the energy companies to keep the price down and not tax the stuff and build infrastructure and other things. But then when you think of the consequences, I mean, given where we have to go now, you have subsidies, not a tax, but a subsidy on these things. Then you build a whole bunch of buildings that are built on the assumption that energy is really cheap and subsidized. And they have, useful lives of 40 or 50 years. And then you get up in the morning and you have the same problem we have in Europe and North America and a few other places, which is we've got the challenges that Diana described so well. So I think, so we got to meet those challenges for sure. But the one thing we don't want to do is make them worse. So we probably need realistic plans. One of the things that, caused the negative response to the fracking and the huge increase in the availability of natural gas in a few places, including the United States, was it was better than coal. Okay, so then, if you want to, deal with the issue, you have to ask yourself the question: is the path we want to follow, getting rid of the coal, and moving to natural gas and then moving to the green technologies? Or do we want to skip the natural gas, and move rapidly to the other? I'm not going to wing it on that. I mean, that's something where I would get a bunch of very knowledgeable people to sit down and say, what are the feasible paths and which one of them should we sort of aim to sit on? But that's the kind of issue that comes up there. The one thing final thing I will say, Martin and Diana, is I know pricing carbon is messy and it has all kinds of very difficult distributional issues. I would love it if we could give everybody on the planet a carbon budget that got smaller each year, and then somehow let them trade so that we did the mitigation in the most efficient fashion. The theory tells us that we can do that, but that involves massive redistribution, right? Within countries, but especially cross countries. When I first looked at it, India had a per capita, carbon dioxide emissions, I emphasize that because it weighs more than carbon, of almost, 1 ton a person, let's say 2010. At that point, the United States was at 20 tons a person. Right, and most of Europe was, doing pretty well, a whole lot better than that. They were at 9 or 8 or something like that, and coming down, except France with the atomic energy. So then so then you ask yourself, well, what happens if you give all the Indians, all 1.3 billion of them, a carbon budget that's whatever it's going to be, that's a huge transfer of income. And so if you get government, I can tell you flat out, when proposals like that floated anywhere near the government in the United States, they were rejected, right of hand. So unfortunately, what's fairest is not, I don't think is, politically kind of feasible at this point. And so last comment, one of the reasons I think we want to keep
Michael, we're almost losing you because the sound is getting choppier and choppier.
I'll try to be very clear. The last thing I want to say is one of the reasons we economists stick with carbon pricing is not because we think it's the solution. It's not, or certainly not a complete solution. It's that we don't want the green technologies competing on a non-level playing field. That's the crucial point, right? We want some charge against the fossil fuel technologies to sort of make the green technologies that are in development and all the other things that go with it, more competitive in the marketplace.
Thanks, Mike. We could go on for hours, but our time has come to an end, so I'm going to have to end it there. But I will just share with you all that there was one other question I had sort of thought I would ask, which was whether there's a sort of disconnect between how economists and how climate scientists look at climate change and think about policy solutions and so on, and how big a problem that is. And I think one thing I've learned, at least from this discussion, is that the answer is no, really. Which is why I don't have to ask it now and kind of tease out differences that there would be artificial ones, because I'm quite struck how much convergence there has been in this conversation, and I want to end with what you both really started with, which was values, right? That there is actually a change in what is important, and dare I say that we're all learning from those who are younger than us in that respect. So I think we can sort of go out on some optimism, because that sort of view of how to think about growth, how to think about material growth versus the other things that are valuable in life and make life worthwhile and create well-being, is clearly something we know is very strong in the youngest generation, and presumably will follow in the generation after them. Which is what we're talking about when we're thinking about 2050. So I will end on that note and just thank you both so much for the conversation. Sorry about the technical problems. We clearly need more of those 5 nanometer transistors to make this work. But let's think about all the energy we've saved in the process. So thanks everyone for listening. Thanks for participating, Diana and Mike. And I do hope to see you all at some point in person, in a low energy efficient way. I'm going to hand it back to the organizers now to I think we're ending the day here. Thanks so much.